It's Sunday, January 23rd, 2022. So much happening, ladies and gentlemen. It's going to be a very interesting day tomorrow when the markets open. And what if these markets do not rebound this week? They have to rebound this week. I don't know how they're going to, but these markets have to rebound this week. If they don't, I think that there's very, very big trouble on the horizon. And I don't know what kind of tricks they're going to try and pull this weekend to get these markets to rebound. Maybe somebody will come out and say something to ignite these markets on more fabrications. I don't know. But if these markets do not rebound from what just happened in the prior week, we're going to see big, big trouble. But I want to share a few articles that I was reading earlier today. And it's just, to me, another reminder of why we better be preparing, why we better be very, very cautious now with what's happening and what's about to happen. Because the news and the data out there is not good. And that's just the reality of this. Mortgage rates hit 22-month high, according to CNBC here. And banks are raising mortgage rates in anticipation that the Fed is about to raise rates. And I don't think anybody now can argue that they're going to raise rates. And I was thinking about this real estate market and what's about to happen to it. I believe we're going to see a massive real estate crash, the biggest of all time. And I think about, looking at these agents on social media, the real estate agents that were posting sales of properties they sold for $50,000 over asking, $100,000 over asking, $200,000 over asking, and bragging about it. And I wonder what's going to happen when this whole thing collapses and these agents no longer are not taking orders or being order takers. It's a very easy market, just being an order taker. But what happens when these markets collapse, in particular the real estate market? Many of these agents won't be on social media. Many of these agents won't even be answering their phones. And this isn't a judgment on real estate agents. There's some very, very good ones out there, but so many people got in the real estate game, got a real estate license, had absolutely zero experience, took the orders, wrote the offers, closed the deal, picked up the check, and that's it. Many of them are not going to be able to adjust to what's about to happen. And if you're a real estate agent, I hope that you put minimally 5 years of income away, because when this thing collapses, this housing market, when this bubble bursts, it is going to be years and years and years before it rebounds. And so if you're a real estate agent, be smart. Put at least 5 years of income away for a rainy day, because it is going to rain. It is going to flood, housing collapse, REOs, defaults, you name it. It's going to be ugly when this thing hits. And most people in the business are not prepared. Most people in the real estate game will not be on social media. Many will not even answer their phone when their clients call and go, "Why did you sell me a house for $100,000 over asking? I thought you told me it was a great deal. It was only going to go up. You told me I couldn't lose. The market was never going to collapse. It was going to go up, up, and up forever. Why did you mislead me?" And so it's going to be a very, very harsh time. So again, make sure you put money away, because a very, very rainy day is coming, and it's going to last a very, very long time. Why you might be leasing, not buying your next couch, also on CNBC today. This is absolutely fascinating. And I go back to what I say many, many times. How in the world can we have a real estate boom, the hottest so-called housing market in history, when 60% of this country doesn't even have $1,000 for an emergency? And you have IKEA here evaluating a furniture rental model after testing it in 6 markets in 2021. Demand for renting home furnishings is now growing, especially among younger people. So nobody has $1,000 saved up. People can't even afford to buy furniture, and we're supposed to be told that everybody's buying homes and this real estate market is normal. It's not a bubble. It's never going to collapse, and prices are only going to go up when people can't even afford furniture to put in the house, when they don't even have $1,000. Give me a break. This is all about institutional money, ladies and gentlemen, flooding the real estate market. And when this market begins to correct, they are going to be running for the exits. And it's going to be the little guy, the little flipper, the person that paid $100,000 over asking price for the home in Riverside out here. Those are the people that are going to get absolutely annihilated. This is not a good sign, ladies and gentlemen, that the economy is doing well when people have to rent furniture, when 60% of this country doesn't have $1,000 for an emergency. It's just incredible reading some of this data. If you can't afford a couch, you're probably not buying a house. My advice here is go on Craigslist, go online, buy it used. Why would anybody, when you look at some of the prices that people pay for couches, they're renting TVs, they're renting desks, they're renting chairs, they're renting patio furniture. I mean, this is absolutely absurd. And what they're paying, it makes no sense whatsoever. Save up some cash, go on Craigslist, go online and buy it that way. But these people, if they're struggling to pay for furniture, how long are they going to hang on to their homes? Crypto meltdown erases $1 trillion in revenue. Are these crypto markets going to affect the stock market? That's my question. Comment down below. Will these crypto markets, as they have begun to collapse, affect the stock market? Not to say, now look, I'm not saying that cryptos are dead and gone. They could bounce back tomorrow. I mean, we've seen the major volatility. Bitcoin could come back and go to $90,000. We've seen the volatility. My concern is that, are these really safe haven assets? When the markets get into trouble, the cryptos get into more trouble. And that's the concern. Because if you truly believe that we're heading to a collapse, that things right now are beginning to unwind and unravel, if you believe that, do you really, really believe that the safe haven asset you want to be in is a crypto? That's just a question, ladies and gentlemen. From what we've seen, every time we've seen slight corrections in the market, we see the cryptos get absolutely slammed. And as we enter a Great Depression, as we have multiple bubbles across the board in stocks, bonds, real estate, how safe are these things? And is this where you want to be? Is this really going to eliminate risk for you, or is this risk? I believe this is very, very risky. Oil could reach $100 or more this year as geopolitical tensions flare. This is on CNBC also. There's no doubt that we're going to break, at least in my opinion, we're going to break $100 a barrel oil in 2022. No doubt about it. And this puts more pressure on the middle class, the consumer, more pressure on the poor to put, I mean, just look at the ridiculous prices of new and used cars, and people are literally going to be priced out of even putting gas in their cars. There's nothing left. By the time they pay rent or they're paying their mortgage, they're paying their $500 or $600, $700, $800 car payment. And you're paying $515, $519 out here in the desert for super. At some point, people just don't have enough. And then when you look at the cost of putting food on the table, insurance, utilities, cell phone bills, and all it takes is one little emergency, one event, your kid falls down, needs 20 stitches, that's $500 at the ER, and it's trouble. Or a spouse loses a job, it's trouble. People are cutting it so thin. And I was talking to my good friend Matt yesterday, and a couple other people, my good friend Mike, and everybody believes now that many people now are surviving on credit cards. How many people do you know that have 5, 6, 7, 8, 9, 10 credit cards? That's how they're surviving. People that pulled equity lines out of their homes over the summer are sitting on that money and they're using it to survive. This is really heading into big trouble, ladies and gentlemen. We can already feel the pinch. Families aren't getting child tax credit checks for the first time in 6 months. This also on CNBC. According to this article, without a January tax credit payment, Jen Cousins, who they interviewed in this article, will have to wait a few extra months to replace the brakes on her minivan. She's put out extra money towards medical expenses for her kids. All 4 of her children wear glasses. One child needs special prescription eye drops. Her husband pays $1,000 a month for medical, but that's just his medical. It just covers him. Reading articles like this, just looking at data like this, tells you that people are going to have to tighten. This tells you that less people can go out to eat. Less people are going to go and shop at a mall. Less people are going to order things online that they don't really need. Because right now, what they need is food. They need eye drops. They need eyeglasses. They need insurance. They need essentials. People are going to be cutting things out. And their standard of living is changing right now. Many people already have moved back home with their parents. They've moved in with relatives. They've gotten roommates to rent out the extra 3 bedrooms in a house that they don't use. People's standard of living, the way they live, is changing right before our very eyes. Many of you have written me, I've said this many times, you drive through certain neighborhoods, there's 4, 5, 6, 7, 8 cars in the driveway or parked out in front of the house. People are sleeping in garages in these residential homes now. And this has been going on for, from what I've seen, for a couple years at least. So this didn't just happen. This didn't all just start unraveling 6 months ago or a year ago or 2 years ago. It's been happening for years. And remember, to people like this woman right here, her kid falls down and needs to go to the ER for an x-ray or stitches. It's $400. What does somebody like this do? What is somebody like this going to do? These are the people who are a flat tire away from big trouble. 35 million families with 65 million children face the new year in a very, very vulnerable position. And we look at the rate of poverty increasing, especially poverty among children. We look at the food banks and charities now having a very, very hard time raising money. And the money that they are raising is buying less food to feed the homeless. And this thing, I mean, it is really beginning to unravel. And it's going to really, I think, be a very, very awful year, this 2022. And it could get worse into 2023. I think we really begin to see things unravel in 2022, and it's going to unravel right into 2023. Inflation surge could push the Fed into more than 4 rate hikes this year, Goldman Sachs says. This also on CNBC today. Fed likely to start cutting its balance sheet by $100 billion a month starting in July. Okay, that's over $1 trillion a year. This is going to be very, very interesting. And this, if this really does happen, the stock market, the cryptos are going to be absolutely wiped out. Wiped out. If the free money stops, it's big trouble. As my friend Matt said the other day, you pull the punch bowl away from these markets, it's game over. And that's exactly what could happen. Now, they could reverse course, of course. They do that, then you know they've lost all control. At that point, if they start more quantitative easing and bringing rates back down, you can kiss the US dollar goodbye. Article today on The Hedge. The cult of speculation is a cult of doom. This was a great article. If you get a chance, check it out. The cult of speculation, which is now brainwashed so many people into wildly speculating, is now the accepted norm here in America. Humans love gambling. They love winning. They love winning something for nothing. The excitement of running with the triumphant herd, all of which are fulfilled by speculative frenzies. It's all fun and games, ladies and gentlemen, on the way up, but there's a much bleaker reality than most realize when things come down. Many people on the Robinhood accounts, many people who got all this free money and all the stimmies, many people who either forgot about 2008 or were too young to remember 2008, have no idea what things look like when the whole thing comes down. When things aren't just going straight up, but they begin to come straight down. And they're going to come down much faster than they went up. And people are not going to know what to do. And unfortunately, most of these people are 110% unprepared to deal with the doom, unprepared to deal with the collapse. They're not diversified. They don't have real assets. They have no cash put away. All they've been doing is gambling and believing that the Fed will not let them down. Don't bet against the Fed. They're going to learn a very, very valuable lesson because they're going to get wiped out. Most of the few remaining slots in the top tier have already been taken by insiders and the offspring of the already wealthy. So the only way to get ahead is to speculate and win, not just win, but win big. In other words, the fundamental driver of this speculative frenzy, according to the article, isn't just greed, it's desperation. We have so many people now that are desperate and they're hoping to, invest $5,000 into the market or into the cryptos and make $5 million and ride off into the sunset. This might have worked for a few people, just like a few people can go to Vegas with $5,000 and win $1 million. It's happened, right? You bet big, you pull the slot machine handle, and maybe you win $1 million. It's happened, but it's 1 in 1,000,000. For the vast majority of the world's population, speculating and winning is the only chance to escape debt or wage slavery. And that's very, very true. People are doubling down, betting big, believing that they're going to win and they're going to be millionaires and they're going to ride off into the sunset and they're going to drive their Lamborghinis and have their Bentleys and their big house, and that's it. Not going to work. It's not going to work. Many people don't even have that much money, and they're betting everything that they have in these markets. They're betting everything that they have on cryptos. And what little that they have is everything that they have. They're going to lose it all. As with cults, skeptics and doubters are vilified. And if I say anything a lot of times to people that's negative for the markets, negative for cryptos, I'm attacked, right? Because it's this cult and this belief that, things can only go up. They have to go up. The cryptos have to go up or these people lose. The markets must go up or these people lose. It doesn't have anything to do with reality. And look, I just call it the way I see it. And at some point, I'm going to be making videos talking about why we should be buying into these markets and why the markets are going up and why the markets are a good investment and why the markets are priced right and not overvalued because of corporate buybacks, 0% interest rates, and massive QE. There will be a time when this all corrects, collapses, and shakes out, and there'll be a time to come in and capitalize on the sales. These people can speculate and gamble all they want. They can believe anything they want. They can tell you, don't fight the Fed. I'm here to tell you, ladies and gentlemen, I'm outside of this cult. I'm outside of the bubble. And I say that this thing is guaranteed to crash. That's my opinion. But I believe that this whole house of cards built on quicksand, built on easy money, built on 0% interest rates, built on buybacks, built on the television telling you that everything is okay when you clearly know that it's not. I'm here to tell you that it's going to all collapse. And you can believe what you want to believe, I'm going to believe what I want to believe because I live in the real world. I'm looking at this data, and in a country where the GDP is based 70% on consumption, where people are spending money they don't have, a country that doesn't manufacture much, a country where 60% of its people don't have $1,000 saved up, a country that's approaching $30 trillion of debt, a country with real inflation at 15.1%, a country where 107 million people are not in the labor force, a country with massive deficit bubbles, massive debt bubbles. There's no way that this does not collapse. And we could go on and on and on. Uncertainty. There was so much uncertainty out there. I'm going to leave it there today. I just wanted to share some of those articles with you. Just wanted to just think out loud a little bit. Please comment down below. Let me know your thoughts. It's going to be a very interesting day tomorrow, very interesting week on these markets. Will we see some sort of manipulation? Will the cryptos bounce back? We shall see. I can tell you what I'll be doing. I will be putting away more cash, more gold, and I will be exercising a lot of patience here. And of course, before I leave, make sure you have security. Have a wonderful weekend. Have a great week. Look forward to talking with all of you very, very soon.